Good morning, my wonderful people. This is yet another day again, and we are here to give you another banger. And well, I'm nowadays more interested in giving you guys what I know I use and has been beneficial to me. Of course, I don't intend to overfeed you with information, but you are free to stick to whatever strategy that is working for you, right? You don't need to keep on testing each and everything. If you try one, it works well for you, please stick by it, okay? Because the truth is, the more information you have, the more you will be confused, the more you will be clouded, okay? So just try to find one that works for you and stick by it. So this is one of the just a minute, I'm trying to look for our this indicator. So I had posted on my Telegram channel. This is the VIP Telegram channel. I had posted on my Telegram channel that I will be sharing this indicator, okay? So for those who are interested with this indicator and the template, the link is in the description box. Join our Telegram and you will be able to access them there for free, okay? So this is the indicator here. I just wanted to show you how to use it. And so for starters, you can use this indicator on any indices or boom and crash, okay? I've not tried it on currency pairs, but I've used it on indices. And let me just open volatility. Let me just go with volatility 10, and I go to templates, this one here. So this is volatility 10. I just opened right before your eyes, and this is H1. Sorry for that. This is H1. You see it has an indicator. When it reaches some points, it gives you a notification, like when there is a spike or something, okay? So this is H1. So you choose your own time frame that you're comfortable with. If you're a long-term trader, go with H1 or H4. If you are mid person, go to M30, or even M15 is still good timing. And especially this indicator here will work very well with M15, okay? So how does it work on other indices? And it will also apply exactly to the boom and crash. So every time this first indicator window has 3 lines: level 30, level 50, and level 70. So anytime we reach level 70, know that it is your point of reversal, okay? Anytime we reach level 70, know that it is your point of reversal. And how will you know that the market will reverse and not continue going up? Okay, if your Bollinger Band here for the TDI is very wide, know that the market will reverse without like trying to retrace back. So I combine this strategy with a TDI indicator. Okay, so why I'm using the TDI indicator is more of a price action indicator, and you guys have been asking where you can get this TDI indicator. It is always shared in my Telegram channel. You go to the file section, you will get the TDI for both mobile and the PC or the laptop or your desktop, okay? So I always add this as a confirmation indicator to whatever strategy I'm always using. Okay, and for example, check your entry points should be: first is if these crossings happen. Every time there is a crossing, it is your first point of entry. Your second point of entry can be when it touches and then it retraces back. Okay, so good points are here, yeah. But you have to come and confirm with these other indicators. It's not just that when it has touched, you come and enter immediately, okay? So for me, mostly when it touches down here, I don't enter immediately. I have to check the other indicators. What are they saying? okay, but my sweet points are these retracing points. Like it comes, it touches here, like it tries to go down, and then it traces and goes up. These are a very sweet points for me, because you'll also find even on the TDI, it has always crossed like the market baseline, so it is completely now on the buyer's area or completely on the seller's area. See this point again when it is retesting, okay, you will find the TDI is doing likewise. So I love sweet such points. When it hits and retraces, those are very sweet points for you. I will use the peak top and peak bottom only if by the time we are touching those levels, my TDI indicator Bollinger Band is very wide open. Okay, so it means the market will retrace and go back to cover that area that has been open for long. Okay, but if the TDI indicator is narrow like this, then know that, you know, there is no much volatility in the market at that time. Okay, like this point here, while it was at the bottom, you see the TDI how it was behaving, because our band was somehow narrow, not very big, so there was no much room to go up. But in this setup here, you find our top line is above 68 here, and our bottom Bollinger Band is almost at area 32. So there is a lot of room to play around here. Like it has to retrace back to the bottom and then start going up again. So this point for me would have been valid if this Bollinger Band here was very wide. So I could have entered on top here. That gives me confidence for reversal. But here I cannot enter immediately, because the market will still stay. It has been a strong trend, but the market will still stay around this area. You see, because it was not like the band here was very wide. So in such a setup, when it goes around this zone for long, I will enter either when it is crossing here or when it is retesting. Okay, you enter when it is retesting or when it is crossing back, going up. Okay, and then when it's coming down, by the time it's touching this point here, the Bollinger Band is very wide open, then you clearly know that it is your time to retrace back. Okay, you clearly know that it is your time to retrace back. Hope you understand that again and again. I repeat that. Hope you understand it again and again. So what are the three things you need to check while using this indicator? Are these peak points here? So if by the time we are touching the peak point, yes, these peak points here, if by the time we are touching the peak points, how is your TDI indicator behaving at that time? If the band is very wide open, then know that the market will reverse. Okay, and this is M15. Know that the market will reverse up to this point, and then as it starts going up again, you can close and choose an entry for going up. And I wouldn't choose this point here for going up, though it was profitable, but it really took long, because you see the way it was struggling. You see the way it was struggling, the same way it was just trying to cover this space here, you know, after it had come down very sharply. Okay, and then this very tight band here tells you the market will be ranging within one zone for some time, the tight band. But immediately after that here, immediately you see this very tight band, and then we hit on top, and then this crossover happens almost at the top as well. Yeah, because every time there wants to be a reversal, there will always be ranging and then fake breakout, and then now go in the opposite direction. So this tight band here was telling you the market will break out anytime. Yeah, the market will break out anytime. And so the best thing to do was to cross up, hit the 68 level of the TDI, and then now come down. Yeah, now this is the beginning of a trend, and so it just came down. So this crossover here, the crossover, especially if the crossover is happening around the top area, you see this crossover is sweet, this crossover is sweet, this crossover is sweet, but the one that is crossing in the middle will probably tell you it's more of a ranging market. Yeah, so if the crossovers are happening almost at the top, come and see how the TDI is behaving, and that is your entry, proper entry. Okay, so you can use this on M5, M15, or even M1. Let's see how M5 is looking for the indices. You see, still the same concept. If it's come down for long, I will still tell you my sweet points is if it is retracing here, because it is above the market baseline. And so because all this far it's been ranging, yeah, but when it comes and hits and starts going up, then that is your sweet point to enter. Yeah, now let's go to our boom and crash. So for the H1, it still applies the same concept that I've shown on the indices. So you will use the normal price action. Yeah, you see it crossed on top and then immediately it came all the way down, and while it was crossing on top, you find here it was retesting our market baseline, and so it was our sweet point to go down. Yeah, here it crossed at the middle and it had crossed the middle here. Okay, so just find a way of letting it work for you, but make sure you mark these zones. Okay, like you see here, it comes and immediately after touching, so this can be very good points for you, like if you enter into a trade at this point and then come with it down, by the time it hits the lower line, you exit. Yeah, by the time you hit the lower line, you exit. So if this crossover is happening at the top level and immediately you check your Bollinger Band at the bottom, which is the TDI, is retesting the market baseline, then that is a very sweet point for you. It's a very sweet point. Okay, now this is H1. Let's go to M15. M15, still same concept. Yeah, still same concept. When it retraces from at the top here, it's your best point. Yeah, when it crosses at the bottom, also your sweet point. Yeah, and especially by the time it's crossing your market baseline, has also crossed the middle Bollinger Band, is your sweet point. Yeah, let's go to M5. Now the best template for this strategy on boom and crash is on M5. Why am I saying M5? Is look here, and while this is crossing, we are already above our market baseline and the crossover here. Of course it had started at the bottom here, but you see here it is giving us a divergence because all this has been going up while the trend is coming down. So this point here is our entry to go up until at least when it is ready to meet again, you exit. Okay, you exit. So at this point it is at the peak. How will you know your entry point again as we go down? This point, as it is coming to retest the market baseline, to come down here, come down with it. Yeah, and this is M5. This is M5. So it is the best points ever. Like at this point, it is above the market baseline. This point here, we reach the peak, we close our upcoming trade, and then we wait for a proper entry to go down. So it goes down a bit. When it comes to try and retest this area again, now we are retesting the yellow line here, and then we go down with it. And at that time we were retesting again the market baseline. Okay, so that is what I was telling you. My TDI is very important for confirmation as well. My TDI is very important for confirmation. You see, every time we are crossing the yellow line, then we must go down in a big way. Yeah, we must go down in a big way. So, and this is M5. This is a crash 500, and you know crash 500 sometimes is very volatile. When you see this kind of setup here, I would ask you go to M1. You trade M1 instead. when you see a ranging market. And how will you know that it is a ranging market? You will only know that it is a ranging market if you check how the TDI is behaving. It is in a straight line. The market baseline is not showing the tendency of going up or down. It's just along almost the level 50. So you know that we are in a ranging market. Okay, so the best for that is you go to M1 and catch spikes from M1. But even this, if you want to use this, you see it is coming to level 50, going up to level 70, coming to level 50. You know, it's just ranging along the top line. So when you see this kind of picture in a ranging market, don't try to trade on M5, but go to M1. Okay, so let's see how our M1 behaves. Now on this M1, I wouldn't recommend you to like try to scalp, but I would tell you to catch spikes with it. Okay, catch spikes with it, in the sense of, you see here they are crossing and a crash happens. Yeah, they are crossing here and a crash happens, and several other spikes come in handy, until at least when you reach down here is where you can exit. Okay, and what will also give you the confidence is if this peak here is the same as former 2 peaks. Yeah, so you are free to place your trade here and come down with it. So I also add a lot of divergences on M1 to be able to know when we are ready to cross. Yeah, because sometimes you will find when the trend is very strong, you will find the yellow line also so much at the top. Yeah, so for you to avoid trying to catch a spike in a strong trend, you will wait only if this peak and this peak is happening almost at the same level. Yeah, so and the first spike comes that we cut across the yellow line, then we know that other spikes will come. Okay, but the best is always, if you want to use it on M1, you can add insert indicators, trend, moving averages, 200 exponential close. Yes, you can add a moving average 200. So a moving average 200 gives you a general trend of what has been happening. So anytime you are below the 200, you know it is so easy to crash. Okay, when we are below level 200, it is so easy to crash, you see here. But when we go above, like here, the spikes will not be much. Okay, so I always try to catch my spikes when I'm below 200, not when I'm above 200. Okay, so even as you are adding divergences and trying to confirm with the TDI indicator, try to make a combination of, like, you see this here, this point, this one is lower than this point. Yeah, so this one is giving us a divergence, and here it's going to the top. Yeah, so if I'd missed this first spike, and probably because I was not very far from 200, so if I'd missed this first spike, I would have known that the second and the third are probably coming. Yeah, because of just this divergence, because of that divergence. Try to find out something that works for you. You can add something like MACD. Yeah, you can add something like MACD. I'm saying this because many people want to get the sniper entries on spikes, and it's a bit difficult if you're not adding anything to do with price action. Okay, it's a bit difficult, and let me tell you the truth, you will never get a super working indicator 100%. You will never. So always find a strategy that, you know, gives you 90 to 94% win. That is a very good strategy to stick by. And then also have very clear good money management. And to add on top of that, come and put a strategy like, if my strategy does not work, I put a stop loss of like 5 to 6 candles. If it doesn't spike, I close. That includes money management. So of course, in all this, you will be opening other trades that do not spike. Yeah, even 3 to 4 trades that you know you've given a stop loss of 5 to 6 candles. But one time you will come and get, you know, like this position, and it spikes in your favor 3 times. Like you see this point here, it is on a straight line. Let me just draw that line. This one here, it is on a straight line. So if you had noticed this, that it is on a straight line 3 times, then you know that after this first spike that it had touched, then other spikes will follow. Yeah, other spikes will follow. As long as it is spiking on the same line, you know that other spikes will follow. Yeah, so if other spikes will follow, you may have opened other trades that, you know, put you in a loss. But eventually when you came and got this one, so the first time this one spiked, it gives you an indication that this line is still active. Then just place your trade and now go with it all the way down. So where is your exit point? Your exit point is when this yellow line hits the 30 level. Okay, hits the 30 level. And especially when you always see this small candle, this small candle, it tells you that the momentum of the market maybe has come to an end. Yeah, so if it's touched your level 30 at the bottom, and the small candle has come, and you see here again we've hit the lower line, then you know that probably it's time to exit. For those who would want to scalp, I'm not trying to condemn you. If you see a spike that would come and sit on top of the yellow line, then you can go a few candles, and especially if you are safe above the line 200. But I wouldn't recommend much on that. So because for me, I catch spikes, I don't scalp more. So something like this here, this one is higher than this, yeah, and the spikes come heavily. This one is higher than this, and the spikes follow. And then from there now we start going up. So your exit point is when we touch the lower line. And you would be careful also from this place here, because we've crossed over. Like it is a point of if somebody wants to scalp, yes. But after 5 to 8 candles, be out of the market, because anything can happen, especially at point 70. You see, this is level 70. So anything can happen at level 70. Okay guys, so this is it for this tutorial. So you can use boom and crash, you can use them in indices. I've not tried it on currency pairs. You're free to test any and then give us a feedback. So for those who need all these indicators plus the TDI, it will be in our Telegram channel. So this is it for today. God bless you and happy trading.